All right, man.
All right, y'all. Welcome back to the channel. We've sitting here laughing now because we really just been recording for about 10, 20 minutes, and we didn't realize that we never hit the record button. But welcome back to the channel. This is the weekly rundown. I'm Mike. I'm here with Marcus, and we're gonna be going over a few things that we some of the economic and financial news that we're seeing this week, as well as some information about the upcoming potential recession, when we're going to see that potentially happening, and just all the facts and data that we can bring to y'all for this week. Before we get started, I want Marcus, my partner in crime here, to go ahead and hit y'all with the disclaimer.
Yes, we are not financial advisors. This is not financial advice. However, we are here to give you our opinions on what's going on in the market and in the world of economics. This is not financial advice.
Not at all. Not at all. So to get things started, what we're going to do, this is the weekly rundown. So we're going to real quickly go through some of the bigger, major news stories that we have been seeing this week and kind of discuss those with y'all. With that being said, I'm going to go ahead and let you kick it off, Marcus.
All right, my guy. Let's see. Let's get some of these articles up. So we have this article right here from CNN Business.
Fed that's probably the biggest thing that has happened this week. The Fed.
Yeah. We're gonna quickly go through this because we just had our FOMC meeting this week is last week. We just had our FOMC meeting, was it Wednesday? So we raised interest rate height another 0.25 basis points, which is what we expected. Trying to get inflation back down to 2%. PCE, the Personal Consumption Expenditure Price Index, rose 3% for the 12 months ended in June, easing for the second consecutive month and stepping back from May's 3.8 increase. So with this PCE data, because of these rate hikes, PCE basically explains how people are spending based upon the fluctuation of the prices of goods, services, or I mean, it can be anything. And
let me stop you right there, bro. I do want to mention this because it's real important. You got PCE data and you got CPI data, which is the Consumer Price Index. Jerome Powell did mention that he's going to be following PEC more so than CPI because he said that PCE was had a more lagging trend. Right now, the CPI is right at about 3%. PCE is at about 3.8, right at about 4%. So being that we're still at 4%, that was Jerome Powell's reason for doing the interest rate hike, or the Fed's reason, because they still want to go down to that 2%, that 2% moving average, 2% as an average moving forward. So they're looking at the PCE versus the lower CPI, being that they're assuming that the data is going to be lagging, which I think we both do kind of agree.
Yes. So
yeah, bro, not to cut you off. I just want
no. Oh no, man. Hey, man. Hey. Shoot. I'll throw an alley. You come and dunk this thing, man.
Hey, bro.
So all right. So let's see what else we got. So we can. I think the next interest rate hike is in September. Then the next one after that is November.
Next Fed meeting is
yeah.
It wouldn't surprise me if they do it. It wouldn't surprise me if they do it. You think they're gonna do it on the September meeting?
I think they're gonna. No. I think they're gonna pause in September. I think they're gonna raise it another 0.25 in November. So we can have some bullish. Some bullish markets for the next 2-3 shoot, man. We can have some bullish markets up until November, man.
And we're gonna get to it later in the video, but I think the bullishness of the market can last a little bit longer than that, but it might extend a potential upcoming recession for years or by even months.
Exactly.
Like I don't want to jump the gun. I kind of want to wait till we get done with the review in the week before I get to that.
Exactly, because if based on my opinion, if we don't have another interest rate hike until November, so we could see bullishness in the market until November. around November, December time. You know, who knows? That can, you know, hey, that can be, that could possibly be the, you know, possibly be that little recession to who knows? Who knows? So
I agree with you. So outside of the Fed chair meeting, and make sure y'all check out our video that we did on Thursday about that and our reaction to it. But outside of that, what else you saw going on this week, bro?
Let's see. All right, what else we had? So we had some few little crypto hearings. Yeah, some crypto hearings this past Friday. Actually, U.S. House Financial Service Committee passes bill protecting crypto self-custody. So, you know, those that like to hold their crypto on hardware wallets, decentralized applications, and whatnot. You know, hey, this is the bill for us. So,
and this is, I know y'all didn't see it. Like I said, we kind of recorded and had to start back over. But we really don't have too many details on this subject right now.
Not really.
This is really like breaking news from Friday. Marcus brought this up to me, and I feel like it could be some pretty cool implications coming from this, especially being that your personal money is being protected. Like I said, we don't have too many details, but as soon as we get some more stuff coming and some more details, we're gonna have some up-to-date reports on that for you all. But
yes, sir. So we got, you know, a few little bills passing and whatnot, and like I said, other than that, we also got to talk about this right here, man. Okay, this is some crazy stuff right here.
Worldcoin.
Yes, Worldcoin, bro. This is insane.
Yeah, bro. You mentioned this the other day, and I want you to say that for today, because
yes, let's see
if we can keep this down to like maybe 1 minute.
1 minute, okay, bro. This is insane. Okay, how about this? Okay, basically, Worldcoin is officially a cryptocurrency. So it's by, you know, Sam Altman is the founder. He is the founder of OpenAI, ChatGPT. You know,
so OpenAI, ChatGPT is making this Worldcoin.
Yes. This is Sam Altman. Sam Altman is.
You got my attention.
Yeah, like Sam Altman. He's the one that sold this chat. You know, the OpenAI dude. He's the one that sold this. You know, sold to Microsoft. So this is what we're gonna do. Instead of going through this article right here, we're gonna go through this little white paper right here. Yeah, I like to call this a little Worldcoin white paper.
We're doing a weekly rundown, bro. It shouldn't take.
I know.
I need 15 minutes going through this paper now.
So Worldcoin is a privacy preserving digital identity world ID, and where the laws allow a digital currency received simply for being human. We hope that there are rules. We hope that where the rules are less clear, such as in the US, steps will be taken so more people can benefit from both. So basically, you buy this little, it scans your eye, and when it scans your eye, your name automatically gets put inside of the database.
Bro, you get this so be some Dragon Ball Z type.
Bro, but man, let me tell you something, bro. So look, you can now download the World app, the first protocol compatible wallet, and reserve your share. After visiting an orb, so this is what they call the things that scan your eye. They're orbs. Like, bro, you go in here, you order one of these orbs, and then you get paid for scanning other people's eyes. Like this is just legit. So after visiting an orb, a biometric.
I want to know, what does this do though? Versus Bitcoin versus Ethereum, what's the purpose of Worldcoin?
A one payment system. Worldcoin is in competition with Twitter. So, well, not Twitter anymore. X. You know, so Elon Musk wants X to be like the one-stop shop for everything. So Worldcoin seems to be doing the same thing within itself by scanning people's eyes. Now that their biometric information is on it's on a blockchain now, which allows, okay, you know, say if they're giving out airdrops, or anything like that, everybody gets a piece of that. So in order to participate, you have to get this orb. You order this orb. You go on the app. You order this orb, and it scans your eyes, and you also get paid to scan other people's eyes. Man, I seen a video on Twitter, man, where like there were hundreds of people in line trying to get this thing. It's insane.
Hold on, bro. Just to make sure we stay on topic, because I do want to keep going with the rundown.
Okay.
What it sounded like, because I have heard nothing about this, y'all. As of right now, all this is kind of going over my head in the crypto sphere. So what I'm thinking probably need to happen is, if you don't mind, Marcus, this sounds like a great idea for a video for you to do in the future. And if any of y'all viewers are watching this, if y'all want to hear more about Worldcoin, OpenAI, which I did not know was behind Worldcoin, make sure y'all leave a comment on that so Marcus can kind of tailor that video to y'all. Before we move on to the next topic, though, Marcus, it looked like you got something else that you want to go ahead and say about it.
Oh no, man! I'll shoot it. Like I said, that's just about it. I'll get it. I can definitely get into this a little bit more in depth during the separate video for you guys. I have a couple of videos that I'm releasing.
Yeah, that's crazy.
Where I'll be talking. Yeah, I can get even more in detail with this stuff, but it's insane.
Things coming at once. So yeah,
bro, it's insane. So and hey, it's rising. Like I said, it's rising in the crypto market, man. It's rising in market cap. It was, I think the coin was ranked like 2,000 something like that, and it's made it up into the hundreds already, man. So it's it's catching traction. And hey, it is, the AI founder was Sam Altman. He is the founder. So, we'll see what kind of traction this gets, man.
Definitely going to check on it. Like I said, if y'all interested in that video, pound Worldcoin, hashtag Worldcoin, and let us know what you think about it. What's next on the list, bro?
Shoot, man. Hey, man, as far as this weekend go, that's about it, man. That's about it, man.
Well, let me put my screen up and see what I've been looking at.
That's about it, man.
I'm gonna keep this short and to the point. I'm pretty sure most of y'all probably already heard this. I have no idea how this is going to impact market, but I'm pretty sure everybody probably dismissed this because we've been hearing claims about UFOs for years. But apparently, there's been a whistleblower who has a few people backing him, and a lot of claims about UFOs being found, potential aliens being found, and spacecraft. I'm not going to get too far in it. I'm probably going to show y'all maybe a 20-second clip from this video, but definitely check it out.
If you believe we have crashed craft, stated earlier, do we have the bodies of the pilots who piloted this craft?
As I've stated publicly already in my News Nation interview, biologics came with some of these recoveries. Yeah.
Were they, I guess, human or non-human biologics?
Non-human, and that was the assessment of people with direct knowledge on the program I talked to that are currently still on the program.
And was this documentary evidence, this video, photos, eyewitness? Like, how would that be determined?
The specific documentation I would have to talk to you in a skiff about.
All right, bro. Like I said, a lot of people laughing on the topic. Serious. But from all the research that I've been doing, bro, this dude is 100% legit. He worked with the government. He got a lot of people following him. They're saying, hey, we're seeing the same thing. And apparently it's been a lot of UFO sightings by different military agencies and members. But apparently there's no system for them to report it. I don't know if you remember, a few years ago, Trump talked about making a new agency of the government called it's not Air Force One. It was
the Space Force.
And everybody thought Trump was joking, and now look, everybody who always talking about aliens, everybody thought it was a joke, but it's seeming like it might be something to it. I don't want to get into it too much because I don't want everybody who disagree with the evidence to pound me down in the comments. But definitely y'all go out there and do the research. That's something that I saw for this week. Let me see what I got coming up next. Let's see here. What do we got next? You already covered the Federal Reserve, so I don't want to get into that. Hey, bro, I think you covered the majority of what's going on this week. So if you want to, we can go ahead and get into our recession topic.
Let's do it.
All right, bro. So I think the thing that kind of triggered us to make this video centered around the recession, because last week you said, during our weekly rundown last week, you said that you felt, and you've been saying this for a minute, that you felt that the markets are going to crash, specifically the crypto markets, and all markets, I guess, are going to crash in 2025. I really wanted to hear your perspective on why you thought that, and I wanted to show you some of the information that I found, and when I think the recession gonna happen, I kind of want to hear your opinion on what I found. But you can go ahead, like I said, bro. I kind of wanted to hear what you thought as far as that
2025.
2025. Mm-hmm.
Yeah, so 2025. Hopefully, 2025 will be a life-changing year. Beginning of it. However, there's so many factors. It's so many things that can happen around. It can happen tomorrow, to be honest with you, but 2025 specifically, because I'm taking into account 4-year cycles. I'm taking into account
4-year crypto cycles.
Yeah, 4-year crypto cycles based upon the Bitcoin halving. So Bitcoin halving plays a huge part in the moves that I'm making, and it's been right.
Hold on, bro. I'm gonna have to stop you a couple times because I feel like viewers need to understand it, and I need to understand it too.
Mm-hmm.
You mentioned 4-year cycles, and you mentioned a halving. So I'm assuming that do these happenings happen during every 4-year cycle, or how often do the halvenings happen?
The halvenings happen every 4 years.
Perfect.
So the next halving is expected. May
of 2024.
March. March of 2024.
So do you expect the market? You saying a recession gonna come in 2025? So are you expecting the markets to go up after the halving?
Think it'll be a buy the news, sell the rumor. So
you are
leading up until the halving, leading up until March of 2024, I believe we'll definitely have a spike. The Bitcoin halving happens. I think we take a tumble somewhere around there. I think that's when this recession will be kind of kicking in or so.
So you're basically saying that the recession is going to set in 2025. But you think the downturn and the start of that is going to happen around March of 2024, a little bit around summer of 2024.
Yeah. So we will see some. We will see some down. Some downtrends in the market and whatnot.
I'm so glad to hear you say that, and I'm.
Oh yeah.
The reason I say that, y'all, because I'm talking to you and the reason I'm happy to hear you say that is because y'all are gonna see over time that me and Marcus usually do not agree on certain stuff when it comes to date, especially when it comes to crypto. Mm-hmm. But I kind of think summer 2024 is gonna be head on for what I'm about to show you in just a second. But go ahead, bro. I don't want to keep cutting you off.
Oh man, we agree on that, man.
That sounds.
So we agree on that, man. So, and I think, like I said, around that Bitcoin happening, because you're also going to have the Bitcoin conference happening around that time too. So, most of the time, you have those that are thinking, oh, okay, the halving and the conference is happening. So, we should see an uptrend in price, but I think the opposite is going to happen, especially after the halving. But
Elon went on.
Exactly, bro, and fucking wrecked me like crazy, bro. Like I still ain't forgave Elon for that. I do appreciate what he doing with Twitter, but I still ain't forgave Elon for crashing the market back then, bro. He really put us. But
go ahead.
Go ahead. No, what you about to say? Go ahead. What you say?
Is there anything else other than the 4-year cycle?
Yeah. So the 4-year, you guys say you got the 4-year cycles. So I'm taking that into consideration. Also, you also have the elections happening next year. So, oh man, let me tell you something, bro. Let me tell you something. Them elections, man. Let me tell you, them elections could possibly be. Who knows, man? That could possibly be a little blow off top, man. Especially if, like I said, man, I'm a 1-issue voter this year, man. I'm voting for whoever's pro crypto. So whoever's pro crypto is getting my vote this year. So, and I think I think the people, crypto is going to be a big talking point for this upcoming election. So, who knows, man? We elect people in office that that are for progressing and the advancement of technology, man. That could definitely add a pump towards the market. But like I said, 2025, we can kind of see that dwindling down. We can also see, who knows, like, China. We got China. We have what's the Taiwan? You know what I mean? So there can be some kind of conflict there that happens then at the time. There could be another one of those.
So hold on. So right now we got Bitcoin and the crypto 4-year cycles in the happening. Mm-hmm. We have what was the other thing? The election.
We have the election. We have the elections coming up.
We have potential war or just disagreements between countries. That is 3 good reasons. Anything else you want to add?
And like I said, man, another one of those too. We can always, it's a lot of, it's a lot of stuff. It's a lot of stuff going. Yeah, it's a lot of stuff. It's a lot of stuff going on with that too, man. And we gotta, keep our eyes open for it. But it's a whole lot of stuff that we can. Those 4 things, well, 3 things really.
Hey, I'm with you, bro, because it is weird how they just kind of went away. And of course, every one of we have some type of surge, and there's no telling how different variants and variations of stuff can end up affecting people.
Exactly.
But
exactly.
You ready for me to show you these charts?
Yeah, man, go ahead. I want to see what you're talking about.
Okay, cool. See what you're talking about. Chart. This is
federal funds effective rate.
The Fred chart.
Fred.
Yep, Federal Reserve chart. Can you see the graph?
Yeah, I can see it. I'm looking.
All right, the graph that we're looking at right now is basically the federal funds rate, the Federal Reserve interest rate. This rate pretty much matches the 2-year bond yields. The 2-year bond yields always dictate this rate. You're gonna see me talk about that a lot in the future, and I've spoken on it a lot in the past. But real quickly, what I want to show y'all is I want to compare, and you can also do this by coming to the site. I want to compare the Fed rate to the 30-year mortgage rates and show y'all something I didn't realize. Are you seeing? I don't see it coming back, dog.
I'm seeing it. So this is the average rate, 30-year mortgage rate. So this is the average price people's paying for their house every month.
No, these are the interest rates.
Okay, the interest rates on it.
Hold on, let me try to change it so I can see you and this at the same time. All right, perfect. All right, and let me change this timeline. I'm just gonna start it back in about the 90s, right before the. All right, perfect. All right, the blue line, like I said, is the Federal Reserve interest rate. What I really want to show you in the audience is what happened around right before the .com bubble / .com crash, and also what happened right before the Great Recession. If you notice by this blue line, before both of those instances, and the same thing is going on right now, the Fed took up the interest rates, right? You see what I'm seeing, right, bro?
Yeah, I'm watching.
Right, which is the blue line. They took them up and they held interest rates to a certain period of time. I'm looking at the blue line. You see where it's flat, that plateau? That's where they held interest rates at. If you notice, each one of those times, during those time periods, relatively speaking, this blue line is closer to the red line, which is 30-year mortgage rates. Mm-hmm. The Fed rate is the rate in which banks are borrowing money. The mortgage rate is the rate that they are issuing out for loans. Home loans make up the majority of the money that the bank is actually making. So anytime where this blue line gets closer to this red line, the bank is making less money. The difference between the two lines is literally the percentage that the bank is making. As a result, when the .com bubble happened before 2000, the Feds held interest rates. If I'm not mistaken, they did it for about 6 months. It looks like it was done from May until about October. So they held interest rates for about maybe 6 months. At that point, certain banks began to collapse. The market began to collapse, and those banks weren't making as much money. As a result of those banks and those companies not making as much money, we had a huge stock market crash. Each one of these gray areas represent a stock market crash. If we go back to right before 2010, right at 2008, you will see that the Fed in 2006 raised interest rates, and they stopped at about June of 2006. They kept them high until around June of 2007. So in the Great Recession, they held rates for about a year. After that year happened, I want to show you guys what happened once this blue line got close to this red line. Like I said, they kept them up until June or July of 2027. The reason that they started reducing the rates in 2007 was because the mortgage bubble began to pop. Right, and my point in me mentioning this is right now everybody's wondering how long is it going to be before the Fed reduces the interest rates? How long is it going to be before the Fed pulls? And they think that it's all up to Jerome Powell. And my point of putting this out is because based off the historical data that we can see in this chart, the same way Ben Bernanke did in 2008, the Federal Reserve is not going to reduce rates until something happens. They're not waiting for the numbers to get negative as far as inflation or to actually go to 2%. They're waiting for a point to see that it's factually going to stay down near that rate and not going to have another jump up. So they're going to wait until pain literally comes into the market. And if you go back to our Federal Reserve meeting that we did our video on, we talked about near the beginning of the video how Jerome talked about he is going to be pain in the market. That pain that he's referring to is not him doing something and cause people to lose jobs directly or him waiting for the job numbers to come back. He's going to wait for something in the market to happen and cause those numbers to go down. The same way that they did in 2000 to 2001, the same way they did in 2006 to 2008. And based off of what I'm seeing here, the blue line is getting close to the red line. The banks aren't making as much money again. So you would expect banks to begin to go bankrupt once again. We've already started to see it in some of the smaller ones, such as Silvergate, and we're starting to hear rumbles with the bigger banks now. So I'm expecting Jerome Powell to hold these interest rates. More than likely, he's going to do another rate. If he makes another hike after he makes that hike, I'm expecting him to hold it, not for 6 months, not necessarily for a year, but specifically until something happens. And like you just mentioned, bro, there's a lot of stuff that could potentially happen over the next year or so. So I also believe that he's going to end up pulling back. And I also believe that there's going to be a crash. And that crash, or whatever triggers that crash, is what's going to trigger Jerome to begin to pull back. And I don't think he's going to do it anytime before then.
So these the banks that failed earlier, what, last year, that wasn't enough pain for Jerome to say, okay, we can go ahead and pause. So like, what's that? Silvergate, Silicon Valley.
The banks, I feel like they say history doesn't necessarily repeat, but it rhymes. Yeah. In the past, they bailed out the banks. This time, they're starting to front run it with a silent bailout to hopefully stop it, and basically any of the bank users will end up paying for whatever the government is paying from through fees like monthly fees, withdrawal fees, stuff like that over time. I think in the beginning that's going to be okay until they run out of money through those methods. And it's also going to be a bigger issue once other things happen. As of right now, you're talking about the biggest issue with what happened so far this year with certain depositors having over $250,000 in the bank and that not being insured. Mm-hmm. the government stepped in and insured the majority of the people who had less than that, definitely. A lot of the people within those specific banks who had more than that amount. And I feel like based off of the current market, for the ones who took losses, it was currently other sectors that allowed for them to make money. So that it didn't matter as much. For instance, the Silvergate, and I can't remember the other name of the other bank right now, they were heavily invested into crypto. I mean,
Silicon Valley.
They were crypto, helping crypto startups. So I can see it that, hey, they probably didn't mind losing those customers. They probably made them plenty of money out the ones that stayed. So I can see it possibly not affecting them specifically all that much right now. But I do believe once the issue happens with job losses that Jerome Powell mentioned, I do believe once the stock market starts to reflect some of the bad stuff that can happen in the future, I do believe that a lot of the stuff that's going on with Russia, China, and other BRICS nations, I do believe that there's a larger lag on the data that would come from that. I do believe that in the future, I think that it takes 1 to 2 to 3 years for us to kind of feel those effects. So as a result of that, being that everything is kind of kicking off now, I do feel like within a year from now to 2 years from now, we could see some problems. And depending on how many sectors end up falling, that recession could be dragged out instead of just a small recession like we saw here. And you still see my screen.
I see.
Instead of a small recession like what we had right here in 2001, I do feel like we could end up something with a little bit more drawn out, like what happened in 2008 to like 2011, just because it's so much that can be affected, and there's so many people that aren't really paying attention to what's going on.
So that's about 3 years right there, you think? And that's after.
I honestly feel like because this blue line, which is the federal rates, being that line is high, is in close to how much the banks are actually making, I personally believe that it's actually started now, and I feel like we are feeling the effects slowly because how much money was dumped into the economy over the past 3 years. I feel like certain banks have money that can kind of cushion them on their losses. I believe that individual people have money that's kind of cushioning them from losses. I feel like certain jobs have cushion because PPP was for bigger businesses also. I feel like those industries have cushion to keep employees right now. Mm-hmm. But I feel like if this all this stuff that's going on with the markets, I feel like if it's dragged out too long, all of that money is going to end up being spent, and we're going to slowly start feeling the effects. I feel like that's why we're seeing the housing market is starting to cool off. The car market is starting to cool off. Construction is starting to cool off. Me mentioning all this stuff cooling off, to us here, it sounds like a cool breeze, but to the people who's working in those sectors, that means less money or the lack of a job.
Yeah. Okay.
Like I said, you saying that you said based off of the 4-year cycles for crypto, that would have crypto going down. The stock markets are at peaks, but if those companies end up getting hit and they have to get layoffs, that's going to change that. That would lead to less housing purchases. Over the past few years, rent has been raised, but if people start losing jobs, what's going to happen to those places that have higher rent? Either they're going to have to go down on the rent, or you're going to have people moving out,
trying to find other places to stay. So you think where that blue line currently is right now, you think that's the point where they're going to kind of start holding these holding them rates up until there? So you think it's at like the holding point where that blue line is right now, like where it was right here in the past,
if
2005.
If you look at this chart right here, and this is why I think they did all the stimulus money. It almost happened in early 2020 after the pandemic. It almost happened right here. Had they not given out that money, banks would have went under, because who was going to be saving during that time period? Who was going to be investing in stuff really during that time period? If they wouldn't have gave up that money, everything had started to drop. But if you go back and look at the stock market, it had plummeted at the beginning of that situation. Cars, the reason that cars initially went up because car salesmen thought they weren't going to be able to make money because initially nobody was going to the lots. You really couldn't go out your house for a period of time, remember?
Yeah.
So they had to do something, and I feel like that just delayed the effects of that time period. We had a reverse repo crisis starting in September of 2019, and that would have just escalated if it weren't for all this stuff. I feel like a lot of the stuff that was supposed to come to a head in 2020 was really just prolonged as a result of the stimulus money and all the stuff that was causing the stimulus money. And I feel like we are going to end up seeing that impact more than likely starting now. But I feel like the Jerome's going to hold interest rate high so that we can feel that impact. And he's waiting on us to feel that impact. And that's how he's going to bring the pain, the job losses, and all the stuff that he's been mentioning at all these meetings. The same way that they did in the past. I think he's following Bernanke's path to the T.
Man.
And let me see what else I got on here.
Jeez.
Like I said, in March, that's when he literally held it during the last recession, the last major recession, until the mortgage industry collapsed. So that's one of the things that happened. That happened in March. They began cutting rates around the summer. By September, you had September is when they started reducing. And soon after they started making those reductions, that's when you saw Lehman Brothers, which was one of the hugest banks at the time, fall. Let me see.
It took that 6 months.
When did
6 months for that?
Let me see. They fell in 2008. So it took Lehman Brothers about a year to actually crash.
So that was enough. Lehman Brothers crashing was enough for them to say, okay.
The housing bubble went crazy. The houses were overpriced just like they are now. I think this market is going to start to soften, and we're going to start to see banks end up going bankrupt or defaulting sometime around September, not this year, but of next year, as a result of the stuff that's going on right now.
Gotcha.
Check this out, bro. I want to pull up the gold prices, and I think the same thing is going to happen again. You mentioned how the crypto market would be affected, so I want to show you how I feel like other markets are going to get affected.
Right, let's see.
Get affected based off what happened in the past. All right, so let me go to all time. Is this on gold? Yeah. All right. So 08, 06. We had the gold market going up the same way it did in like 2019, 2020.
Was you in gold at that point?
Hold on. And when?
Around
in 2006?
Yeah.
In 2006, nah. I wanted to be, but 2006, nah.
I wasn't even thinking like that.
Hold on, look at what I'm talking about. In 2006, gold had went to around an all-time high. I don't know the exact numbers, but it was right under $700. People thought that was it because the Fed was about to raise interest rates. They were like, there's no reason to buy gold if interest rates are going up. We can just make more by saving, which is what a lot of people are thinking now.
Yeah.
But what happened was, based off of the turmoil that those interest rates caused, gold ended up staying steady for a minute, but it ended up going through the roof. It went up, came back down, and did it again. We're talking about going from under 700 in 2006 to about 1,700. You see what I'm saying?
Yeah.
So that was definitely more than a double. It might take 3-4 years for that to end up happening again, but I do feel like we can see a double in gold within the next 3 to 4 years, especially based off of what's going on with the economy right now, especially if we factor in how other countries feel about the U.S. dollar right now and how they feel about the U.S. dollar based off of what happened last time and how they're probably going to react to that this time.
Gotcha.
I'm not going to get into silver. Most of the time, silver is going to follow gold. It's like a dog. They say that gold is the head and silver is the tail. So if you see gold go up, most times silver will go up in an exaggerated rate. you see gold down, most of the time silver will come down in an exaggerated rate. So silver may be an even better investment when it comes to that, but gold is going to be the indicator. And like I said, based off the past, I think it's going to work perfectly during the next 3 to 5 years.
Yeah, man. Probably next 2 to 3 years, man. It should be. I
don't want to go too low with the numbers because stuff can happen. The government can do stuff, make certain bills that can push stuff back. You know that can happen as well as I do. So that's why I say 3 to 5 years. I expect to see a double on gold. I also want to show y'all a chart of the S&P 500. I'm not going to do all stocks. I just want to give y'all a broad overview of how the crash of 08 affected stocks and how I think it's going to repeat again or rhyme again for now. If we go back to 08, while the interest rates were being hiked, which is this 06 to 07 period, if you notice, stocks went up the same way that they are doing now. The pause ended in 07. So even during the pause, when interest rates went up and they were paused up, the stock market still did good. And a lot of people wonder, like, well, that's not. A lot of people say, well, that's not necessarily what the economy showed, forgetting that the economy and the stock market are two different things. But stand on task though. Through the interest rate hikes, through the pause at being high, the stock market consistently went up. I mean, there was a slight pullback, but it consistently went up all the way until after the what was it? The housing pop. Even after the housing pop, it stayed kind of high all the way up until Lehman Brothers fell, which I said was around September of 08.
So this is kind of just what the market doing right now, to be honest with you. It looked like it's going up, but it ain't going down. So it's going to take something massive.
It took Lehman. People don't. I remember because I used to watch news at the time. Older people, I'm sure, remember, but our generation, for the most part, do not remember this. After they began, while it was going up, and after they began to cut back on the interest rates, people were losing jobs everywhere based off of the stuff that I just showed you in the audience. They were losing jobs, but people didn't believe that the market could go down like it had did. And I think we getting that same euphoria right now. People don't believe that the markets could get chopped in half right now. It's unfathomable to people because it's been so long.
Yeah, it is.
Our generation has not experienced it yet.
Yeah, it is.
So I feel like the exact same thing is going to happen. We're going to see this same drop. What was this? 15, let's just say 1,500 going down to about 1,300. What kind of, and this is S&P.
You said 1,500 to 1,300?
1,500. So that's a difference of about 200 over 1,500. So from what a market is right now, this is the S&P. We're talking about average. I can see the S&P swinging down by another 20%. Do keep in mind, for the S&P to swing down 20%, there's going to be certain companies in the S&P that go down by way more than 20%. That's just going to be the average for stocks in general.
That's just the average for stock. Yeah, that's not just single stocks maybe taking like a 30, 40, 50% hit maybe.
And look, we had a slight pullback, but it's leading to a run. If I'm not mistaken, they started raising interest rates in 2022 this time. So in 2022, we saw a slight pullback. Going back to 06, 07, when they started raising interest rates, immediately at first we saw a slight pullback. Are you seeing this right here, bro?
Yeah, I see it. And then we roared up.
We saw a slight pullback, and then we saw the markets roar. I'm expecting to see a slight pullback, and I'm expecting
which is what we got. We got a pullback right here.
I think it's going to roar some more.
And then the market's probably going to roar.
I think the markets is going to continue to roar until people honestly believe, hey, there is actually a problem. Hey, there is other stuff going on. I mean, bro, I'm just looking at it all honestly, bro. We just found out this week that is proof of UFOs, and the market didn't care. Nobody cared. So as of right now, the market is having a hard time convincing anybody of anything. We got a president. Mitch McConnell just blanked out. We got a president that ain't working. Seem like the last president. I feel like the world, especially the United States, is on sensory overload. And right now we just not paying anything. Everybody just living their life because
you said they're on sensory overload.
Yeah, I'm dead serious. I feel like it's a sensory overload because so much is going on that nobody is actually paying attention to the danger until it hits them. And I feel like it's probably gonna be next year around summer or sometime leading into 2025, which is why I was waiting to hear your answer, because I think you're 100% right, bro. I think summer 2024 leading into 2025 is going to be a lot of problems because nobody sees it coming. Right now,
nobody's and the thing, but you want to know what's crazy though?
Before you say that, bro, you have economists everywhere saying that it's happening. It's gonna happen. It's gonna happen. But you don't see nobody trying to save money outside of people who work within the industry. You know what I'm saying? You don't see it.
Yeah. That almost look. You see this? I wish I could pull up the Fred chart. You see this dip right here? You see that dip right there?
Which one?
Not
year?
year. Pull where we're 2020, right?
Right here,
no, the one before, the big dip right before that, right there. Yeah. You see that? Like that could possibly, that same formation right there could possibly be happening right on top of here right now. Go back up. Go over. That right there is happening right here right now. So like I said, probably up until
I really don't include that, bro. I don't include that because it was this was like a black swan freak event. But those numbers do indeed show us how much people are willing to sell off if it comes to it. So I do agree with you on that.
So like I said, bro, I think we've got some run time, man. We've got some run. Put your longs in, cause we finna have some bullet. It's gonna be some bullishness, man. And like I said,
it's gonna be bullish, and I am gonna capitalize off of it. I'm gonna capitalize off of it. But are you seeing the chart right now?
Yeah, I see. You
see this line that I have right here?
Yeah.
Do you see this potential resistance right before the 19 situation?
Oh, right there. Yeah, I see that.
We had the top right here. The market jumped back up to that top, which is still basically right here. And our last deep dive was still about in that same range.
In that same little area, man.
Based off of that resistance, bro, I truly believe the next bull run is going to take us up and drop us right back to this area right here. I really do believe that. And if we go back and let me see if I can. I wish I could stretch this out a little bit longer, because the same thing kind of happened right here. You remember I told you this was the section that had that little dip before the run.
Yeah, and then
it is back at that section right here. Is back at that section right here. I wish I can go further because I'm willing to bet you there's some resistance right here around the 1630s. It's probably just going to show probably around the early 2000s with the .com bubble.
Yeah, bro, that's crazy, man. That's crazy. So, that lines up with what both of us think, man. Because I mean, I'm just looking at. I'm just going off of the Bitcoin halving history and what the charts did. You know, once the halving came, and for the most part, bro, it crashed hard. But leading into it, that's when we got all of that. That's when we got all that bullish momentum, man. So I can definitely around that time. Yeah, man, that works out perfectly.
Yeah,
so, that works out perfectly, man. So like it can. Bro, we can be bullish probably up until, like I said, we can be bullish.
Let me pause you because this is super important.
Go ahead.
At the end of the day, viewers, we are not financial advisors.
We ain't got no financial advisor degrees yet.
We are investors that find it to be important to inform other investors. So we're trying to pass out knowledge. We're using our information to develop a game plan individually. So by all means, take the information that we're giving you guys and develop your own game plan. I'm not saying that we're going to be correct. This is just the hypothesis and the conclusion that we're coming up with based off of what we're seeing, the data that we have, and past decisions that have been made.
Yeah, man.
Yeah,
man. But like I said, man, it's crazy how that's lining up, man. So it's so probably got to make 2 sales then, man. One in 2025, one in 2025, and one in 2024. Because I'm telling you, bro, like if this next election is going to be huge, man. This next election, I believe, is going to be huge. And
we over 50 minutes in. We over 50 minutes in.
50.
So I want to ask you. Let's see if we can both give you 30 seconds. Give me 30 seconds. I want to see if we can sum this up. What is your plan based off of the information that we just discussed over the next 2 years? I know this might change, but as of right now, what's your plan?
Yeah, well, it can always change. Like I said, this is not financial advice. This is just giving you my opinion and letting you know because it's not written in stone. So as of today, my plan would be, so there's a Bitcoin happening in March. So I would say we'll probably be bullish, take profits up until January, maybe January, February of 2024 of next year. Okay, I'm gonna be ready. Okay, Bitcoin halving is coming, and normally we see big drawdown there. So I think that'll be a good time to take some profits on whatever you're holding, whatnot. It's always good to dollar cost average, but I would take profits then, and I will wait because I think that's when this downturn is going to happen. So, and then after that, we got this election coming up, man. So it's, oh my gosh, that's going to be tough, bro. That's going to be tough, bro, because I mean, if we get some new leadership in office, especially a president that, as far as crypto goes, is pro crypto. I mean, bro, that can resurge the market. That could be that next resurgence that we could have going into 2025. You know what I'm saying?
The election going to allow for some time for some new game plans.
Exactly. So we definitely, that's why I said, it's the game plan can possibly change because of these elections. I mean, it could be a possibility, bro. We get somebody up in here that just don't give a fuck about that. And then at that point, it's like, oh my gosh, you know what I'm saying? you know what I mean? But I would definitely be in cash. I would be in cash for the majority of next year. We have this election coming up, so we have to take into account, the results this election is going to bring. So, just be watching and vote smart, man. Please, please vote for some. You got to vote for some folks that got some sense, man. Vote for some folks that got some sense, man. Come on, man.
I can't tell y'all how to vote, but I will tell y'all how I'm my general moves.
But they can vote for somebody with some sense now. Yeah, that's bad, man.
Always vote for somebody.
These folks ain't got no sense, bro.
Right, let me do my 30 seconds, though, bro. So for me, my plan with metals.
I'm curious to hear this.
With metals, gold is around all-time highs. So what I'm probably going to be doing as far as metals that I'm purchasing, splitting that, dividing that between silver and platinum. Not too much platinum, but I want platinum because of the investment opportunity and the fact that platinum is lower than the cost to produce it right now. So I don't think it's going to be going down too much. So I can see that being a safe place to store money, even if the market is to go down. With gold being at the all-time highs, I do still feel that it could have room to go up based off of what we just talked about. But I don't want to be caught in something that's at its all-time highs when statistically it has room to go down. So instead of gold, I'm probably going to be buying some silver. And if the markets were to get choppy, or if the gold to silver ratio was to drop, I'll probably end up swapping a lot of the silver that I end up for purchasing for gold at that point. That way I can take advantage of both sides of the metal market, if that makes sense. For stocks, I'm probably gonna ride up the market for the next about year. You know, I'm big on Palantir, and I don't want to hold any stocks for less than a year, because I get taxed at a higher rate. So for the next year, I'm probably gonna be pushing Palantir real hard. There's not too many stocks that I see right now that are a good value. I do see a lot of great stocks, but a lot of them are high right now. So I'm going to be basically really, really doing Palantir. I'm hoping I can get a double in that within the next year. That's uncommon. That's abnormal. That's not usual. But I do feel like Palantir could hit $30.
It's like at 17, about $17.
It's 17 and like
$17 right now.
$7. So I'm hoping I can catch it down a little bit and ride it up to about 30. So stocks, I'm not going to be in it too much other than Palantir, or unless I can find something good. Metals is mostly going to be silver and platinum. What other markets? You already touched on crypto. What else is there, bro?
Hey, speaking of that, now
I'm not touching houses. Housing crash until the market drops, until there's a crash. And at that point, I'm definitely going to be jumping in. So hopefully 25, 26 will be years where we can kind of, look at houses or either.
Yeah, bro. Oh man, hopefully, like I said, hopefully that's going to, that's going
to
be the time.
We got less than 2 minutes, Marcus. I'm going to let you go ahead and do the conclusion and wrap it up, bro.
That's going to be the time. I want to say this too, man. Like, only stock that I own is Coinbase. But like I said, man, with this choppiness that we're going to see in the future, I'm going to scoop me up to the video, man. Is it NVIDIA or is it NVIDIA?
I think it's NVIDIA. It's NVIDIA. I do want that, but it's just too high right now.
It's way too high, man. Which is why I want this crash. This crash gonna come, man. And I'm not gonna lie to you. I may actually sell out. I may sell out of one of my crypto positions, and I may get me some buy me some NVIDIA, bro. I'm gonna sell out of one of my positions in crypto and get into NVIDIA, man. I've been wanting to get into that. I should have bought it when it was cheap, man. Should have bought it when it was cheaper, but I do want to get into some NVIDIA. So, but yeah, man. See, I think that's just about it, man. We appreciate you guys tuning in for episode 2. This is episode 2.
Episode 2.
Yeah, 3 is coming. We got some more.
Let me add to the conclusion. We go ahead and wrap this up. I want to do it.
Yeah, we got, like I said, we got a lot more content for you guys. We're planning on growing this channel huge. This is gonna be, bro. We're gonna be like Channel 2 Action News quality in a few more minutes.
Make sure y'all subscribe. Make sure y'all like the video. Check the details section down below. We're gonna have some links for different apps that y'all can use. If you're interested in Webull, our links are going to be below. If you got any comments on the video, leave them down below. Anything you want us to talk about, anything you want to ask us, leave that in the comment section. We'll see you guys on the next video. Dual Economics, we out.